Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome back to the show, Mike.
Oh, it's great to talk with you. We're definitely seeing a lot of interesting things take place in the financial markets this week, that's for sure.
Well, taking a look at the stock markets, all of them are in the red. The NASDAQ the least, the Dow the most, but nobody's having a happy day apparently. What's behind that? Is it because maybe natural gas prices are just too high, or OPEC is going to limit production? What's the story behind what's going on with the stock market first?
Well, I think there's several factors, and what you're mentioning with oil and natural gas is a big part of it. But one thing underlying the technical factors of the stock market is that since around the first week of June, the internals of the market have been in a decline. This means that there have been more stocks going down than up, and this was even happening in July when the stock market went up, August the stock market went up, and into Labor Day. So this was a harbinger or warning sign that the rally was likely to tip over or end in some sort of pullback. Doesn't mean the market's going to crash, but we're definitely have been seeing a pullback take place since Labor Day. So I think these technicals are a key indication of that, or warning of it. And, you know, at some point, I do think we're going to see the market bounce back up. But then if the technicals remain weak as they have been, that would be a warning that we're really shifting into more serious decline at some point, probably next year. But that's all something to watch for later on. But the other thing is that's the fundamental factor is, I believe, what you're mentioning, and that's inflation. Because if people can recall that are listening to us, in the first quarter of this year, Jerome Powell and the Federal Reserve, and also many of the people on CNBC that are famous financial celebrities, like, let's say, Kathy Wood, they were predicting that, there will be inflation coming in April, May, but it'll go away by the fall. Transitory was the key word that was being bandied about and repeated over and over again as a way to make people not worry about it, because if people worry about inflation, you know, it can become a self-fulfilling prophecy, but they also might say to themselves, well, these stocks that I own might not be worth as much because higher inflation will make bond yields go up and can make the yields on corporate debt go up, which would be harmful to the balance sheets of many large companies. So these stock investments might not be so good. But when April, May came, the inflation numbers came out, and the market then did rally into Labor Day because people believed it, that the inflation was temporary. They weren't worried about it. But by now, no one is saying that, you know, anymore. Even the Federal Reserve and Jerome Powell, they're now saying, it's elevated, but it may not go away. It may just stay higher than we were thinking. So they've changed their tune, and this is causing investors and stock market traders who were so complacent about the risks of inflation several months ago have to readjust what they're looking at, because the situation is undeniable now. In fact, it's very unusual what's going on if you compare it to the way commodities have traded really since 1980. But I just put out a piece this morning saying just the past 20 years, just to show, because I was using 20-year charts. But what's different is seasonally, commodities as a whole would tend to rally into the summer and then have some sort of pullback into the fall and the fourth quarter. So, for example, energy prices, oil prices and other energy prices would almost always rally into July, the driving season, and make a peak and then fall into about Thanksgiving, and you'd have a new buying opportunity for energy stocks and so forth. And other commodities, such as agriculture commodities, corn, cotton, wheat, sugar, and so forth, over the past 20 years, and really since 1980, they have tended to also rally in the summer, but then have a dramatic decline going into January of the following year and really retest their lows or even make new lows, because we had been in basically over decade-long bear market for agriculture commodities, where they're making new lows almost every single year in the fourth quarter. Well, this time around, this summer, all these commodities, for the most part, did make a peak around May or June, but instead of going into a real decline, they simply sat there, went sideways, and in the past 2 weeks, some of them have made new highs and rallied and turned up. So, as you mentioned, natural gas prices have exploded to all-time highs in some cases in Europe. And some of your listeners may be people interested in uranium. Well, the uranium price exploded in August. I mean, it just accelerated to the upside, and was really one of the things, if not the thing, going up the most in that month. And September, we have seen the price of cotton take off. And these are all trends that in the past 10 years and really 20 years, 30 years, would not happen. You know, these things would typically decline in the fall. So this all tells me the inflationary trend is actually much stronger than the Federal Reserve is even admitting or has admitted yet. And from an investment standpoint, to me, it suggests that commodities are something people should have a position in one way or the other. You know, as part of diversification, I do, with some commodity ETFs and commodity-related stocks and energy stocks and so forth. So despite the turmoil in the stock market, the NASDAQ pulling back since Labor Day pretty good, and I think the pullback could continue a little bit longer. I'm still hopeful of an end-of-the-year rally, but there is definite weakness in the markets. You know, the energy stocks don't show that at all. So I think that's where the strength is now, and I don't think this is just a trade for a couple of weeks, but I think this is going to be a trend for years, where commodities from now on are basically going to act stronger than the stock market.
Do the supply shortages have anything to do with this? Computer chips, other items? Right now, I can't get a replacement bulb for my car's headlight.
Oh, they definitely do. And, you know, I had a problem like that myself. Not a bulb for a headlight, which is really remarkable if you think about that. But I tried to order a laptop computer in around the 4th of July, and it was supposed to come. It was from Dell. Supposed to come by the end of that month, and they delayed it. And then they delayed again, and it came in the middle of September. So it took 10 weeks, basically, for me to get a laptop. But when you have inflation, that can cause disruptions in the supply chains. And there's a lot of stories about this happening in China, because higher energy prices have been causing a rationing of energy, electricity, not just for consumers or people in their houses, but for factories. And so that's limiting production. and are continuing to have an impact in that sense. And one of the things, simplest ways to call, there's so many causes of this stuff, but one of the most simple ones to realize is that the price of coal has gone absolutely through the roof. So there's a massive coal shortage in China, and that's obviously impacting their energy grid. So, it's quite remarkable what we're living through. I mean, you thought a year ago, in times all these kind of things would pass, but doesn't seem to be the case.
Do we know why China can't fire up their coal-fired plants, why they have a coal shortage? Is it because mines were shut down because of concerns over COVID?
Well, I think it's that, and also they do import a lot of the coal from other countries, and there's been shipping disruptions all over the world. I know in the United States, on the internet, I've seen people pass around stories about, or pictures showing all these tankers off the coast of California waiting to dock, but this is going on everywhere. And some of the biggest disruptions have been in the largest ports in the world, which are actually in China. And it was due to COVID, a shortage of workers, just as, you can find lots of restaurants open only half the week, in many parts, just everywhere in the United States. I suppose it's the same in Canada. There's a shortage of workers in restaurants. There's a shortage of workers, and I guess in just about everything.
Yeah, I saw an article actually published by a former restaurant worker, and she said, "Why would I return to a minimum wage job where I'm sexually harassed and underappreciated by my customers, when during the time I was laid off due to COVID, I updated my university degree and I now have a business management job. Why would I go back to waiting tables?" Plus, she pointed out, several of my coworkers died, so they're not coming back either. Well,
it's good that she did that. It took advantage of the situation the way she could. If only everyone would do that. I'm sure for every story like hers, there's stories of people that did nothing but watch TV and become alcoholics. So.
Yeah, and that's a hard job to give up too.
Yeah, that's right. Any habit you make, it becomes a habit.
We'll have more with Mike Swanson right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mike Swanson. Mike, Canadians see a little bit of a horrible irony here. The first act that President Joe Biden did was cancel the XL pipeline that would have brought environmentally produced oil and gas from Alberta down to Louisiana for processing. Well, now he's pleading with the Russians to open up their natural gas taps to Europe and pleading with OPEC to produce more oil. Look, he could have got it from Canada, a reliable, politically stable source. But instead now he's asking dictators and questionable politicians to supply the world's oil and gas. Maybe Americans aren't really aware of that, but Canadians really are. Do you find there's a horrible irony here?
Well, the problem with American foreign policy, and it doesn't really matter who the man in the White House is or woman, if there ever becomes one, they tend to be extremely short-sighted no matter what they're doing. They don't really plan ahead. They almost always just react to opinion polls or what their voters want, and the defense industry, what they want too is very important. So in an issue like this, they want to cater to the environmentalists, but then when they do that, in the long run, that can cause problems. And that's the funny thing about, I don't know if funny is the right word, but, what happened in 2020, just exasperated many underlying trends that had been going on for years. the term social distancing. They just put a name on something that had been sort of happening anyway. In the sense of people spending more and more time on the internet, not with face to face with people. So Amazon becomes one of the most successful companies or stocks last year, as more people shopped there than went to the stores. And what you're mentioning with the pipeline is just think the energy policy in the United States has been a mess forever, and here we go. Here's the fruition of it. They don't really have a coherent strategy in which you can really transition out of the so-called more polluting industries into so-called clean industries without some sort of disruptions. So you're seeing that in Europe, you're seeing that here, and it is pretty incoherent because it doesn't make a whole lot of sense.
Well, try convincing the people in West Virginia that coal is bad.
Yeah, you're not going to do that. That's for sure.
Exactly. And so, and where are the senators, Democratic senators who don't want to pass Biden's, bill? Are they in energy rich areas that see that his bill would hurt it?
Oh yeah, that's where the mansion is actually. The key senator is right there in West Virginia.
In his yacht.
Yeah. He wants to tax the rich though. He said to people that saw him on his yacht and came up to him, but thing about West Virginia, there's not a whole lot of rich people there either. So even the billionaires that own the energy companies, they live outside of that state. So there you go.
Maybe they all live in Washington. I think Washington State might have some of the most of the billionaires in the U.S. because they don't pay income tax in that state.
Oh, really?
Yes.
I didn't know that.
Yes, Washington State has a sales tax, whereas in Oregon, they don't have a sales tax, but you pay income tax, state income tax. So there's a good reason to have your software company in Washington. Or,
for sure.
Yeah. If you become a millionaire, like all the ones who originally started off with Bill Gates with Microsoft, he paid them in shares, and they all became millionaires because he couldn't afford to pay them in cash. Now, you've noticed something that's fun. We always talk about the Robinhooders on this show because I think it's a sport of yours almost to watch these people. But what's going on with Robinhood? They had their IPO that ballooned at the start and then fell like a rocket coming out of orbit. What's going on now with their business practices?
Well, something really fascinating that I do actually think has implications for all of us in the markets. In 2020, there's an explosion of new people getting into the markets for the very first time via the Robinhood app. In January this year, the story of GameStop kind of was the culmination of that and it dominated the 24-hour news cycle for a weekend. Since then, GameStop has peaked, but the importance is these millions of people, came into the markets, and started trading all these kind of crazy stocks. And there's a top 100 Robinhood list that is on the app they get into and bid the stocks up. And, they've had an influence on the markets. Not, as powerful as people were talking it would be back in January, but an undeniable influence. They also will buy exchange traded funds and so forth. And bull markets, which we've been in, need new buyers, new people, new money or new people coming into them to keep fueling the market higher and higher. And the valuations have become so high, really coming into this year, that it became something of a pyramid scheme. It just needs new people. And if those new people stop coming, then that's what brings in stock market tops. So what Robinhood has just announced is a new marketing initiative. There's 9 million about college students across the United States, and they've already got 3 million of them as customers, and they want to get the rest of them. So what they are doing is a marketing initiative in which it's only for college students. You have to have a college email address, and then you can sign up to Robinhood with no money. You don't even have to put a deposit down, and they'll fund the account for you for $15 and then enter you in a lottery to win $25,000. So this is, like, to me, really crazy, or a real sign that Robinhood is, from a marketing perspective, a business perspective, has simply run out of customers or potential customers to market to that have any money. They've basically dominated the marketplace so much, over 20 million account holders, that there's no one left. So in order to show that they're growing, they're reaching to the bottom of the barrel by, giving money to people just to open the accounts themselves and putting them into a lottery to try to encourage them to do it. It's like a free lottery ticket, and we'll give you $15. Now, from the standpoint of all the rest of us, I think it's an important story, because if Robinhood has reached, let's say, peak Robinhood, then the markets are ultimately going to be in danger of tipping over if they haven't already, because there's not going to be the new buyers coming into it like there was last year up until really a couple months ago. Now, this doesn't mean the stock market's going straight down from now, on. I do think we'll get an end of the year rally at some point, but I do think this is a long-term, warning sign that we could be entering, a big shift in the markets, the making of a stock market top, which I think ultimately would be bullish for gold, because if the stock market does have a decline, the Fed's likely to be more easy on its Federal Reserve policies, print more money, abandon this path of reducing the quantitative easing bond buying operations, and the U.S. dollar will decline as a result. But I'm talking, next year. But I do think this is a significant development with Robinhood, being having saturated the marketplace.
Well, that reminds me so much of the gambling websites. We'll give you $100 towards your first bet.
Yeah, it's exactly the same. It's a great analogy. I mean, casinos will give you $25 worth of slot coupons. It's the same exact thing.
And usually when you walk out of the casino, how much money do you have?
Nothing.
Mike, thank you so much for chatting with us.
Thank you. Great to talk with you.
My guest has been Mike Swanson, editor of WallStreetWindow.com. If you have any questions for Mike or any of our other guests, you can send them to info@HowStreet.com, and we'll ask that question for you. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook when it works. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.